Today, let's talk about the rare earth giant NP Materials. Its stock has been on an incredible run lately, catching the eye of retail investors everywhere. So, what exactly is this company? And how did it transform from a traditional mining business into what many now see as a high-tech manufacturer? And more importantly, how much potential does this market really have? After NP Materials released its Q2 earnings on August 7th, the stock jumped 8.4%, going from $71 to $77 in after hours trading year to date. The shares are up a staggering 330%. No wonder retail traders are piling in. So, what stood out in the earnings report? Revenue came in at $57.4 million, beating expectations by 22%. Adjusted loss per share was 13 cents, better than the expected 20 cents. Production numbers were especially impressive. Rare earth oxide output rose 45% year over year, and neodymium-praseodymium oxide output surged 199%. For anyone unfamiliar, NdPr is a critical material used to make the powerful magnets inside EV motors and wind turbines. That explains why investors are so excited. Now, NP isn't just digging up ore anymore. Historically, it exported raw rare earth concentrate, which is a low-margin business. But now the company is moving downstream into value-added materials. Its materials segment brought in $37.5 million in revenue. Its new magnetics division, in just its first full quarter, contributed $19.9 million with adjusted EBITDA of $8.1 million. Another key shift. Since April this year, NP has completely stopped exporting raw materials to China, signaling its exit from the low-cost supplier role. That move helped attract some heavyweight backers. In July, the US Department of Defense invested $400 million, taking a 15% stake and becoming NP's largest shareholder. The Pentagon also provided a 10-year price floor guarantee of $110 per kilogram and committed to buying 7,000 tons annually. On top of that, Apple struck a $500 million partnership with NP this year. Starting in 2027, Apple plans to use NP's rare earth magnets across hundreds of millions of devices. So why has NP Materials become a retail favorite? It's the only large-scale rare earth producer in North America. It benefits from Louisiana trade tensions, Trump era tariffs, and Biden's Inflation Reduction Act. Demand is exploding from EVs, wind power, AI, and robotics. And of course, on Reddit, it's become hyped as a patriotic stock, with retail traders banding together to buy in. But here's the big question. After such a huge rally, is it still worth getting in? Right now, NP is trading at a price-to-loss ratio of 24.9, about 20x higher than the industry average. That's a very rich valuation. Plus, it still relies on imports for heavy rare earths, meaning its supply chain isn't fully independent. So, our view is, if you already hold the stock, consider setting a stop loss around $60. If you don't own it yet, it might be wiser to wait for a pullback into the $50 to $55 range before scaling in. Looking forward, NP's story isn't just about one company. It's really about America's attempt to reclaim rare earth dominance. In the short term, the stock has run very hot. In the long term, the real test will be when its new factory comes online in 2028 and whether it can deliver consistent profitability. For retail investors, the key is balance. Recognize the tailwinds from policy and demand, but stay alert to the risks of a valuation bubble. So today we've walked through NP Materials' incredible rally, its earnings beat, strategic transformation, government and corporate backing, and the demand drivers fueling its growth, along with the risks and the long-term milestones to watch.